Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Thursday pre-market prep. Spencer Israel, Joel Elconin, Dennis Dick with you this morning. Got a lot going on. We had a little bit of a tech, I don't know if I want to call it a tech wreck, but we'll call it some tech weakness yesterday. Seeing some follow through this morning, so we'll talk about that. Of course, IPO madness. We haven't, it's been a record year for IPOs, but we haven't talked about them too much on our show outside of the SPACs. But of course, you had DoorDash yesterday, AI yesterday, Airbnb today. So we'll talk about the crazy action in those. We have Facebook, of course, getting hit with a couple of lawsuits from states attorneys general and the FTC. We had Starbucks give guidance during their investor day. Disney's investor day is today. We have a couple of earnings on our radar. Asana, Adobe, after the close today, Lulu, Costco, Oracle. So some earnings to discuss. Two guests today. First up, Marc Chaikin will be on our show at 8:15. He's the founder of Chaikin Analytics. And then at 9, I'll be joined by Dmitry Pargamanik. He's the co-founder of Market Chameleon. He's going to give us some option trades as it relates to seasonality. Joel, how are we doing this morning? Wait a minute. We're on mute. Let's fix that first.
Good morning. Here we are on No Tangent Thursday. We got a lot to cover today. S&P's talking to September here. They're in the red by 8 points at 64.50. Little pop overnight, 81.25, which was nice to see. Pre-market low, 61.50. Yesterday's low right there, 59.75. There's your key to more downside. Crude rebounding up 62 cents at 46.14. Gold shellac yesterday only up 30 cents today at 1838.80. Silver hugging 24. It's up just 3 pennies at 24.02. And Bitcoin is in the red by 225, just kind of leaking off that $20,000 level. That's down at 18,195. And Triple D, bring in Triple D here. I hope today's show is as good as the pre-market show today. Spencer, you should have put this one on Spotify.
I know you said no tangent Thursday. I'm saying all tangent Thursday, all tangent Thursday. But no, we're going to talk Tesla. And we're going to talk it pretty much right off the hop here. So obviously, big reversal day yesterday. Contrary to popular opinion, DoorDash did not cause the fall in the tech wreck yesterday. I know Kramer was saying that on CNBC, but if we do the grade 1 math, NASDAQ lost over $400 billion in market cap yesterday. DoorDash tacked on an extra $25 billion from where it was expected to open. So $400 billion is not $25 billion. I know some people are saying, oh, but Airbnb is coming too. You could argue it. You could argue a bit, may come into that, but not the whole sell-off. What needed to happen was we've been on a relentless run, especially in Tesla. I mean, we've been straight up. It's been so easy. It's been textbook. 450 to 650. You're talking about a 40% move in 3 weeks. It was time for some profit taking. It was time for some traders to lock some of it in. And that is what happened here. So it isn't, because DoorDash, IPO, and Airbnb is coming, that we're going to sell every tech stock possible. Doesn't make any sense, that argument, when you do the math. But Tesla. So what happens now? We still have the catalyst. We've got serious profit taking obviously happening yesterday from everybody who has participated in the last 3-week run. You have the classic 2-day move here this morning. Last night I had somebody tweeting at me saying, oh, when do we buy? When's the opportunity to buy? I was like, usually you wait at least until the next morning because you usually have follow through the next day. So we have an analyst rating that's actually helping that thesis with Tesla here this morning. Spencer, give us the analyst, and then we're going to break down the technicals here on TSLA.
Yeah, so the rating this morning that you're referring to was New Street. It was a downgrade to neutral. And then we didn't talk about this yesterday because it wasn't a new rating, but JP Morgan came out yesterday. They reiterated their bearish point of view, and they raised their price target to a stunning $90. That wasn't new, but that was being passed around yesterday because it was, anytime a Tesla bear comes out of the woods, it's always notable. But so there was that yesterday, and there was a new street downgrade today.
Why that gets passed around is after the fact, Jack, because the media, this is what happens. I know I have Reuters reporters call me all the time. Wall Street Journal reporters call me. They see a move and then they want to know why. They want a fundamental reason why. So you call up your traders. Why is Tesla selling off? They'll say, some might say technicals. They're like, well, I saw this JP Morgan note. So they're reaching for a fundamental reason because you know what? People don't want to read about, we were overbought and it was time for a sell-off. They want a fundamental reason. So, then everybody grabs on the JP Morgan downgrade. It wasn't even a downgrade. It was just reiterating what they had already said. On another day, that wouldn't even affect the stock. So it wasn't selling off because of JP Morgan. It sold off because tech was having a profit-taking day. Believe me, stocks go down. They don't always go straight up. I mean, we have been relentlessly going up on Tesla. It went up 200 points in 3 weeks. It was due for some profit-taking. That's what this is. It's profit-taking. I think now is the question, what happens now? So you have the follow-through of New Street, with a downgrade here today, timely little downgrade to really hammer the stock down another 25 points. I think you got support probably at the 540, 550 area. I would not be surprised if we test that area today. I know that's going to spook some people because it's 30 points down from here. We could. I do think we turn here eventually today and I think it's the classic 2-day move where you get the really weak open, you get the flush after the open, where everybody says, get me the hell out, I can't take it anymore. And I think then you'll find some stabilization and eventually start to come back up because we still have the catalyst. So it's still people like me who are looking at this thinking, it's probably going to have a run next week. It's probably going to have another run. Is it going to get back to 650? I don't know if it's getting that high or not, but I think you're going to get another shot in the sixes. I don't think the Tesla run is over. So, and the valuation, you can't look at on that stuff. It's never mattered to Tesla anyways. We still have the catalyst though. I'd be very surprised if it tops 7 days before the ad. I was saying it could top a day before, a day after. I believe the ad will be the topping event. And I think the Tesla high will be in for a long time, but I think it happens next week. So I think you're going to get another shot here yet. So if you're spooked, I mean, if I was in it, and we don't give investment advice, I think you're going to get another pop up tomorrow. I also think you're going to get a little more pain here today though. So I'm actually looking at it to possibly buy the dip, but it's going to be late morning and I want to see some stabilization. I'm not trying to catch the falling knife because I've done that before and you know what? It hurts.
What about SpaceX going down?
That has nothing to do with Tesla though, really. I mean, you could say, okay, they're going to hammer Tesla. And it was the booster, right? Pretty cool video. Did you watch the video? Video was cool.
No.
I showed my wife and I was like, you got to see this landing. This is a nice landing. And she's watching, and it blows up. But anyway, it's apparently a success. Elon Musk said that was a success story. So I don't know.
The news flow has turned, right? And I know you have the positive catalyst with the S&P ad. The news flow has turned. A couple things. A few weeks ago, Musk said to his employees, we got to cut costs, right? Okay. That was ignored. Goldman goosed it with that upgrade, which was nicely timed. It gets up, it gets a nice pop. Then they do an offering. Okay. That's kind of negative. And then the SpaceX, I agree with you. It's not that big of a deal. I also did see that there was a fatal crash in South Korea that's being from, I'm not sure what model that's being investigated. So, there's a big positive catalyst. There's also a negative catalyst. Then you have your technicians yesterday that see the key reversal. You go up through 651.28. You go to 654.32, and then you come down through that level. So it probably didn't work, the last 99 times out of 100, but it definitely worked yesterday. So you had, the machines piling in on it. I'll go with your area. Two lows, one at 541.51.
I like that number.
541.51, and then there's another low at 54.51. So you got to eyeball it. 550. I think
Yep,
that
yep.
that's a potential area for a bounce.
I think so. I think you can have a little more washout, which we're already seeing. I think it's a classic 2-day move, and I don't think we're, at the end of the bull run in the overall market. We still set up seasonality, still sets up well. We still have the catalyst, and people are saying the catalyst was all priced in. Maybe it was, but it just unpriced to the tune of 70 points in 3 days. So, I mean, you get that down to 550, you get the 50% retracement of the move from the ad. That's just, ducks in a row, a nice number. Now, not necessarily, stocks don't have to do anything, cut through the level like a hot knife through butter, but you start to see stabilization at that area. Maybe I take a shot. Again, you always got to stop yourself out, have your risk tolerances in. People saying I've been bullish Tesla, yesterday. I've been bullish Tesla for 2 months, guys. I've been, well, not 2 months, for the last 3 weeks since the day it got added. Remember, I was saying 450. It was like 470. I was like, I think it's going to go higher. And then it was 500. I said, I think it's going to 600. I went 600. I said, I think it's going to 700. I don't know if it's going to 700 anymore after yesterday. It could be 650 is going to be the top. But I don't think it's over. I think you're going to get a run next week. So I'm thinking like, I'll probably watch it, see if it can stabilize that 550 today, not jumping in necessarily, but looking like maybe Tuesday, because Friday is the ad day. I know everybody says the 21st, but it's got to be in on the 21st. So it's Friday at the close is when they're going to be buying. So do they come in Monday? Do they come in today? Do they come in Tuesday? Eventually, there's going to be some people coming and buying this thing again. So I don't think it's over. I mean, anything can happen in the markets. We only live in probabilities. We never know anything for sure. But I've seen stocks get added, and I've never seen a stock this size get added. So I tend to think you're going to get another run up midweek next week. So you got like 2-3 days. Maybe it just bounces, and maybe it just bounces right back. But I'm not shorting Tesla at 580.
Okay. And a little bit of oversupply to work into as well, right? Because of people that were caught between that 600 and 650 area. They might want to be mitigating. I mean, you're a ways away from that now, but let's just keep an eye on the closing price. The closing price from yesterday, 604.48. That's a ways away from the all-time closing high price at 649.88. So let's see if it can try and get green on the session here. Yet to fill the gap, you only have to go to 588. So if you're looking for a gap fill, maybe easily get that. That's only 8 points away.
Has the bubble burst in all of the other EV names? Spencer, I'll throw it to you because you've seen stocks like XPEV. It's down 40% in a week and a half. You got stocks like Fisker. They're getting downgraded here today. Just hammered from the 23 high down to like $15 now. You have a lot of these other EV names. NIO's still trying to hold in there, but it's starting to look heavy as well, and head and shouldery too. Taking Tesla aside because it has the ad catalyst, what are your thoughts here on the other EV names?
There's more. I mean, Hyliion, all of them, not all.
Well, Hyliion, and I'm actually took a flyer in that one down here. I'm probably going to get stopped out on it today. But there's so many of these, that HYLN topped out 2 months ago and then never participated again. But what about all these other ones? Like, I mean, go through a few of them.
Okay, let me pull up my list here. I'll keep a list handy of a bunch of EV stocks. Let me pull it up. Okay, so we've got NIO, you mentioned, LI, XPEV, Fisker, you mentioned, Lordstown Motors, which is Ride, Workhorse. Oh, we should talk Workhorse because
Sure.
they delayed the announcement of the U.S. Postal Service contract to Q1, right? Haven't followed up on the stock since then.
I mean, it all got stupid. KNDI too. I mean, it went from 8 to 17 and it's back down at 8. I mean, I guess if you don't think it's over, if you think you're still going to get another run here, some of these stocks come down enough that you could take flyers on them. I kind of like the Fisker story still. Citigroup top ticked this, and we talked about it on the show that day, just jokingly on the 25th, but not even jokingly, kind of serious. Citigroup upgraded the stock. And then you can see the big move on the 25th and had a little bit of follow through the next day. But that upgrade basically top ticked the stock. And we said it on the show that day that Citigroup just top ticked this because it had run from 10 to 20 and now they're upgrading it. And 10 to 20 in like a week and a half, and now they're upgrading and 22. And the timing of that upgrade couldn't have been worse. It's been straight down ever since. It's now 15. So question, gets downgraded here today, Fisker, or initiated underperform. What's the rating from Wolf?
FSR. I don't actually remember. Let me pull it up.
I think it's a sell. Is it initiation or is it down? I think it's just initiation.
It's initiation and underperform, giving a price target of $16. So all these things, there's
okay. Stop.
Yeah,
they're initiating at a sell and they're giving it a price target of 16.
Yeah,
what the hell? Stock was 16.83. You're telling me to sell to pick up 80 cents?
I think that's
and people are selling at 15.20.
I think that's their way of like covering their ass. Like,
holy macro, it's a stupid rating. That's flat out just.
How
stupid.
do you really feel about that, Dennis?
No, that's just flat out stupid. The stock's 16.83, and you tell me to sell it for 80 cents on a stock that moves $1 a day. You're gonna put a sell rating on it. Put an $8 price target on it. Get convicted there. You're right. This is just a hedging rating. That's just a dumb rating. Anyways, sorry, Wolf, but that one's a dumb one. 15.22 Fisker FSR. The stock is trading down significantly here. I like this story. The chart is awful looking. It looks completely like a Head and Shoulders. I think you could eventually see 12 again. This thing gets back to 12. I'm going to be a buyer. So I sold my Fisker. I got talked out of it. And, I see, this guy is smart. I mean, out of all the EV, you got to think who you're buying in that. This Henrik Fisker guy, I've watched him on CNBC. I follow him on Twitter. This guy's smart. He's maybe not Elon Musk smart, but he's only a step down from that. Like this guy is, if I was, looking at, which EV plays, and there's like 50 of them out there, and I'm looking at the management teams and I don't know them all, but just from watching this guy in a few interviews, I was like, this guy's smart. So this Fisker one, I kind of like this.
They're all smart. I thought
I'm sure they're all smart. They're all billionaires, right? So.
Yeah, that's right.
They're all smarter than me.
Yeah.
We had Thomas Healy on from Halion. I thought he was super smart. I mean, all these guys are smart. It's and the thing is, like, none of the there's been zero incentive to look at the fundamentals in any of these stocks, right, for this entire time. Yeah. So maybe now that they're out of favor here, maybe that
some charts, Joel.
Yeah, charts. Some people want charts, some people don't want charts.
I don't want to see our mug shots, man. I don't do. All right,
let's just end this EV thing, okay? Because there's not that many. There's just going to be a couple companies. There's been 4 auto companies. Tesla's coming on the scene.
I think Fisker is going to be one of them.
You think okay, but in 5-10 years, I mean, make the call, buy the car. I like to see the car. I like to see some production. I mean, it's just like this whole. There's going to be electric vehicles. There's no doubt about it. We're making a transition. Are there going to be 300 different car companies and battery producers?
No.
Am I going to pick the right one to buy? I mean, it's
hard to do.
Michigas. I mean, it's I don't know. We talk about it and it's there and it's happening. Own a sliver of Tesla.
Oh, I lost track of time here. Can I go grab Marc Chaikin?
Bring Marc into this conversation.
Yeah, he can bring us in.
Because you know what? People want to talk EV stuff. I know we've been talking about 15 minutes. People like this stuff, though. So, and I think it's fun to try to pick the winner. Speculative capital. I mean, you're right, Joel. You don't know who's going to be the winner here. But if you like a few of them, throw some, lottery ticket money at a few of them. I had the Fisker because I kind of liked the story, and then I got talked out of it. And you know what? It comes back down that 12
You couldn't talk me into buying any of these.
You own Tesla. It's like the 4th most valuable company in the world. So don't say that. You're right in on.
And I want to sell it.
I want to sell it, but
I want to know, Marc, are you taking a flyer on any of these names? Just speculative capital?
I know he's not.
Oh, wrong. I traded NEO last week. I bought it under 42 and I sold it at 46, but that's about as far as I'm prepared to go. The only smart people in the space are the people who are selling stock, like Tesla, $5 billion in the coffers. Smart. Come on, guys. These companies burn money like crazy and you're going to get diluted. And I agree with Joel. This is like trying to pick the winner in the cable business in 1976.
It's kind of fun to do.
You know who the founder?
Lucid.
You know who the founder of cable was?
No, who?
A guy named Khan with a company called Teleprompter, doing closed circuit prize fights and concerts. They went bankrupt. Come on, guys. This is just pure momentum. This is 1999.
It is on these names. I completely agree with you. I'm just saying there's a few of these that are going to be, because we're just looking, a lot of these EV names have been cut in half in a week and a half. So is this over? Is the story completely over now? Done, move on? Or is there another leg up again? because we thought the story could have been over back in October when they hammered all these EV names, and then it got another life in November, and then went straight up for a month, and some of these went up 200-300%. So they've come off 40-50%. What's the story now?
No, they're just trading vehicles. Maybe
I agree with that. I mean, if you're making money trading these things,
they're not electric vehicles, they're trading vehicles.
Hey, maybe when Tesla gets into the S&P, that rings the bell on the whole group. I don't know.
I think so. I think I could get on board with that.
There's a bit. Let's segue, because you guys are going to get frothing at the mouth on this one. And
we love froth.
I know. Well, how about this theory that they're floating the idea that Robinhood's going to go public with Goldman Sachs as the lead underwriter? I would say that if Robinhood goes public, they're ringing the bell on the whole market. So hopefully that doesn't happen till the March-June time period in 2021. Because the Robinhood traders have been powering these stocks. Without the Robinhood traders, you wouldn't have the EV bubble, in my view.
Oh, I completely agree. All of the smaller companies, they just get a hold of something, and it's not normal. Even like Kodak, I mean, was your poster child too, goes from 8 to 60. I mean, and the volume was crazy that day, but in one day, I mean, these are moves that aren't driven by normal, institutional participants. This is driven by the FOMO, the froth. But it's fun to participate in these things. I mean, again, it's not my bread and butter. I said I'd like to trade boring, but I still like to mess around in these things every once in a while with speculative capital, though.
Yeah, remember 3D printing. That was very big in 2011, 2012.
$95, I believe, was the high on 3D, if I'm going from 97.
Yep. Our power gauge rating
$10.
turned bearish at 85.
Did it ever turn bullish again?
No.
It just stayed bearish forever.
Why would it?
Bearish to zero.
But I mean, it's an interesting market. I think the biggest question that investors have to ask is this 1997 or is this 1999?
That's what I was asking. Yeah, we don't know.
I'm a shadow listener.
I don't know the answer to that, though. And that's why one thing I am fairly confident in is I believe that inflation is coming, and more so than they're going to tell us. We're already seeing inflation. So I'm scared to just sit in cash at 0.5% and watch assets. If you're sitting cash through this whole thing, you're like vomiting right now. So I think you want to be in stocks or potentially not even stocks, real or whatever. I just don't know if you want to be in cash. Maybe you do. Maybe we're going to crash and burn, and and eventually maybe the vaccine's not going to work and we're all going to go back down to lockdown. It's all going to be awful. But it also could be the case that we come out of this lockdown, and people are like, I want to do stuff. I've been locked down for 6 months. I want to go out. I want to go to Disney World. I want to travel. I want to get an Airbnb. I mean, some of this stuff might actually happen. So what are your thoughts on all this?
Well, I think you need to look for stocks that will benefit regardless of the timing of the reopening and the success of the reopening. So I'm looking at stocks that are going to benefit from a Biden focus on infrastructure and clean energy. So I picked out 3 names that I think are really interesting. Parker Hannifin, Quanta, which is going to help upgrade the electric power grid, and First Solar. So I think, if you're buying stocks like this, you're not betting on a fad, which is what EV is right now. You're not betting on the cruise lines and the airlines at these levels. They're pretty steep. You're betting on pure industrial plays, and that's where the balance has swung as we've had this sector rotation into materials and industrials and away from tech. And I think that's a smart bet. I would not sit on cash, wouldn't necessarily buy NEO here, but I would buy stocks like the 3 that I mentioned. And you could find out.
What was the second one, Mark?
The second was Quanta Services, PWR, which we've mentioned before on here. They're the biggest builder of the electric power grid, and clearly that needs to be upgraded. You've got cyber threats in there.
That's been a monster.
Yeah, it's been a great stock. We've had a bullish power gauge rating for over 6 months, so this is nothing new. But I think these are the kinds of stocks that investors can buy, and they're not really for traders. You can trade them if they dip, but they're for investors who want to get cash off the side.
I'm sorry, Mark, what was the last name you mentioned? PWR?
First Solar.
First
Solar.
Solar. Yeah, these are names that we've talked about.
Yeah.
And, we are coming into a very seasonally strong period starting Tuesday, Wednesday next week, going through the following Monday. Larry Williams has done some studies, so I don't want to take credit for this. If you buy on the 11th or 12th trading day of December or the 16th trading day and just hold without a stop in the SPY, over 83% profitable over the past, I think it's 30 years. So what that says to me is this is a really good time to be looking for bargains. We're a little soft here because the stimulus bill is bogged down yet again. I don't think Brexit's an issue, but the combination of the COVID caseload explosion and the stimulus bill now being on the radar screen means we'll probably be soft into this mid-December timeframe. People really need to be looking to put money to work.
Do we get the Santa Claus rally though?
Definitely.
So
Definitely.
positioning, we're getting a pullback here now and some other names. So you've given us 3 nice names there. I love solar. I mean, I love all the solar stocks. So I don't know. I've loved solar for a long time. Some of these have had significant runs. Like, I mean, I bought SunPower back at $8 is 21. At a certain point is, a lot of the good news priced in. That's what I'm concerned about.
Yeah, that's why you want to try and buy them on dips. I'm also looking at Pinterest, which we've mentioned on here. I think is really interesting, especially as the alternative to Facebook.
Hey, Mark, could you clarify that statement you said when Tesla goes back into the S&P? You said ringing the bell. When I think ringing the bell, it either the start of the fight or someone getting knocked out. Are you talking?
There's an old expression on Wall Street: they never ring a bell at the top.
Okay.
If with all this hype, you do have some institutional negativity. JP Morgan is out this morning with a really negative comment, maybe yesterday afternoon,
yes,
on Tesla. I mean, it's sort of silly, $90 price target, but someone once, some wag said that all Tesla is a giant ATM, a dilutive ATM for the shareholder. They just take in money. You look, they've raised over $22 billion in the last, I think it's 18 months, 24 months. Where is that money?
Does it have any business?
They burn it.
Does it have any business being, the top 6 most valuable companies in the world?
If you think there's a $3 trillion valuation down the road, it does.
Do you think that Tesla, has the potential to grow into the valuation? Like I could be talked into either way. I mean, obviously I've been, saying the valuation is nuts publicly, but I mean, it's been nuts for a while and it continues to go up. So is this a company that could just maybe continue to branch out of cars? And obviously, they got the solar aspect, but starting to get into everything. I mean, space travel, you can look at, you never know what's in his brain. So do you think Tesla could eventually challenge Apple, Amazon? I mean, it already kind of is, but do you think it could be one of the most valuable companies in the world, if not the most valuable company in the world? Because we were buying it today. You're saying it's going to challenge the big 4 for being the most valuable company in the world.
Yeah, you've got an unstable genius at the helm. If you look at Google, if you look at Amazon, you have Apple with Steve Jobs and now with Tim Cook, you had some really solid citizens running these companies. Elon Musk is a genius, but is he a stable genius or is he an unstable genius, to dip into the political rhetoric? I think he's an unstable genius, and I've seen companies over 50 years that got away from their core competency go belly up. So I think you have to value this as what it is. It's an electric car company and a battery company, and see what you think. But these are trading vehicles. I think if you buy Tesla at these levels and you don't use a stop, you're a fool.
We're on the line with Marc Chaikin of Chaikin Analytics. Joins the show every 2 weeks to share his fundamental and technical wisdom on the markets. Marc, I need you to talk me out of something here. Okay. I just
hope
pulled
it's not
up
energy.
Okay. I'm pulling up the monthly S&P chart here, right? And I'm looking at the March low, and I'm looking at the recent high. talk me out of thinking that this market's going back down to 3,200.
Oh, no, never, not happening without some exogenous event, not with that Fed put and Janet Yellen coming in. Don't see that. I see 4,200 before 3,200.
I'll take 4,200 before 3,200 too, Mark. I'm on the same side as you.
Yeah, Goldman Sachs is using 175 as their earnings estimate for the S&P. You're in a zero interest rate environment. As you said before, there's nowhere else to put your money. There's a whiff of inflation in the air. And we're looking past the COVID lockdowns to a better day. And there'll come a time when that's all been priced in. But with all this money on the sidelines, I don't think that time is yet.
Okay, I'm buying the weekly 4,000 S&P calls.
You talked to her. This one to watch. Joel's on the whole world anyways. All the high Momo
I
stuff.
just look at this chart. And I just look at the history of the market, and okay, maybe
what do you
not.
see bearish about that chart? We're at all-time highs basically. What do you see? I'm looking at the same chart you're looking at. What do you see bearish?
I just see all these lows here at like 3,200.
You think you want to come back down and test those?
Yeah.
Well, but
there you go. There I go thinking again.
You can also use the Fibonacci extension of the decline and get yourself a 4140 projection, I think it is.
I mean, that was such a wicked sell-off in March. Like, we lost 30% in basically a month, which is absolutely incredible when you think about it.
Yeah, 33% in 22 days.
You hear everybody this year that, just made a killing, on Twitter. Only the people who bought, down there. That's all you hear about. There are some hidden horror stories here of people who panicked. And, I was at the point of almost panicking, and I was actually 70% cash during the damn fall. But, I was like, there's people who puked their guts out. There's people who got stopped out in March. They are hidden out there, and they're not tweeting about it because nobody likes to brag about losing, but they're out there. All those people are looking at this and thinking, what the hell? What the hell? I mean, I was one of those people for a long time. I did not buy. I'm basically the only person on Twitter that did not buy in March, because I didn't know what was going on and I wasn't coming in. And, I started buying stocks in mid-April because it was apparent that, we were flattening the curve and we started to look up. But I mean, the people who were just buying in March when we just fell, the 30%, we didn't know what it was then. I mean, that was a gutsy call to just come in on March 21st and say, look, this is it. We're going up, back up. I mean, it looked like businesses, the Ackman bottom, it looked like stuff was going out of business.
Well, you didn't have to come in on March 23rd. You could come in April, I think, 12th when
that's what I did.
Power gauge rating on the QQQs turned bullish.
That's what I did. But a lot
smart.
of people, but I'm saying there's a lot of people, Mark, who sold it all down there. There's a lot who couldn't take it anymore. I mean, that's epic selling pressure. A lot of those people probably didn't get back in. So
when they get back in, that's when you got a problem.
Yeah, and I think that a lot of those people are still sitting there looking to get back in. And I think that's continued to propel us, right out of this crisis. And now they're looking and they're saying, oh my God, there's a vaccine coming. And, these stocks could continue to go higher. So at a certain point in time, you're right, when all those people get back in. But I don't think we're done here yet. I know everybody yesterday with the sell-off yesterday, people are claiming that the bull run is over. Every time we sell off 2%, everybody claims it's over. But I don't think we're done yet.
I don't either. There is one group, though, I think people need to be careful with, which are retail stocks. Retail stocks typically take a beating this week and next week. That's been a pattern that's been around for quite a while. They peak around Thanksgiving and they turn down. And you started to see it in stocks like Best Buy and yesterday Dollar General, which I had some puts on and closed out yesterday. Taking a big hit. So I think you got to be careful in retail. And interestingly, a lot of them, like Target, are making new highs. Movado, Signet Jewelers. There's a lot of risk in retail on a short-term basis.
This is a great point you're making. And one thing I'm just going to say, and we haven't talked about retail stocks on the show for a while, is you look at JWN, you look at the Signet Jewelers. I mean, these stocks have gotten their entire losses back. Signet Jewelers is all the way back. Signet Jewelers was not in great shape before this thing started. I mean, Kohl's has basically got its entire losses back from March. JWN has been on this ridiculous November run. In 1 month, the stock has went from basically $12 to $32, getting the entire losses back again. Are these companies, turning it around and we're all going back when we're going to not stop shopping, not stop? Maybe. But a lot of good news is priced into a lot of these retailers now.
Yeah, I would avoid this group.
I would too.
Even though some of them have bullish power gauge ratings like Target and Signet and Movado.
Just run too far.
The apparel
too fast.
Apparel stocks are okay because they have a big online presence. Deckers is just killing it, and it's had a bullish Chaikin power gauge rating for over 3 months, so I'm comfortable talking about it. But there's a difference between retail and apparel, and you can't conflate. You've got to really make that distinction.
I just want to jump in. We got 6 minutes ago. I don't see a reaction in the market, but we did get.
We forgot to tell Dennis to go wide on the
worse than
jobless claims.
expected jobless claims. I mean, I don't know how.
Market doesn't. I mean,
no.
Higher unemployment is good because you'll get more stimulus.
Yeah.
Come on.
That was what we talked about for years. The bad news was good news, and the good news was good news.
Bad news.
Rigged market.
Someone asked about a couple boring stocks. Can you talk boring stocks at all? The person's new to the chat. Ford and GE.
Well, the autos in general have been a strong group. Let's start with General Motors.
GE. GE, though, I said. Ford
GE.
and GE.
It has a bullish power gauge rating, which is a miracle.
That's the first. When did it turn bullish?
My chart is slow here. It'll be up in a minute.
Because you've been bearish on that forever.
I know. I think it turned bullish in the last 6 weeks. I've got to clear out my cache, but give me a second here.
Reboot. That's what I always do.
Yeah, General Motors is bullish since May, and let's look at GE.
And then Ford too.
Yeah, Ford has been bullish as well.
This 950 level in Ford is enormous.
Huge. There must be
the level of all levels. JV Spec, you're in the chat. I don't have my book open. Oh no, I do have my book open. I can go look too. I opened my book early today. Look at this. All right, let's go look in the book while Chaikin gets his.
Clearing out my cache.
950. I can see there's some size there. It's again because it's Ford. I can see 790,000 shares there, which stands out like a sore thumb. There's probably more hidden there too. So you're probably over 1 million shares there for sale. So I mean, it takes 10 mil basically to take that out. 950 though is a huge level for that. It can take. I'm still long Ford. Takes out 950. I think 10's the next stopping point. So let's see if we can take out 950.
All right, let's go to GE. Power gauge turned bullish in mid-August, and it started outperforming the market in late October with the stock at about 850.
It turned bullish in mid-August?
Yeah.
Why did you turn bullish? I mean, that's an awesome call, but what did your power gauge see besides the future?
The future.
It saw the future.
Believe it or not, it's everything. It's all 4 categories: financials, earnings, technicals, and the experts.
Which one was that?
Macro.
G.
You turned bullish in the middle of August. That was the low. That's an awesome call.
I think as the market looks to industrials, maybe this is. Plus, there's a lot of shorts in that name. A lot of disbelievers, and that's what propelled, I think, the rally up from 8 to.
You know what else propelled it from 7 to 10 was Jim Cramer. He got on the Ford. He kept featuring 4G. Who's going to 10 first? He talked about that like every other show. He was talking about GE going to 10 when it was 7, then GE going to 10 when it was 8. I mean, he ended up being right, but there was a lot of Cramer pump in there on GE and Ford as well.
Well, I mean, if you ask me, do I want to own GE? I'd rather own Pinterest or First Solar, but the rating is what it is, and it starts outperforming the market, and that means the shorts are basically pinned, and that's a good situation.
All right, Marc Chaikin is the founder of Chaikin Analytics, joining us every other Thursday. Can't recommend their platform enough. Marc, we appreciate your time. Have a good rest of your day.
You too, guys. Stay cool.
All right. If you liked Marc's insights, hit that like button. Show us some love. Show him some love. Show us some love with that like. We appreciate that. Guys, can we just talk like IPOs like 2 seconds? And we're not going to get bogged down in it, but
Dennis can't talk about anything for 2 seconds.
I know. I mean, that DoorDash open.
Oh, boy.
Insane. It was just wild. So,
did you already do your DoorDash rant?
Just off the hop. Yeah, we did it. We said that. DoorDash did not cause Marc. Marc needed a correction. It's all need a correction. Everybody, it's a cool story to tell, but it wasn't the reason the market sold off. The market sold off because it was overbought. It needed a correction. It got it yesterday.
So DoorDash IPO price $102, opened at 182. We've got Airbnb coming down the way this morning. Their IPO price has already been they already raised it several times. It's now $68. So I guess the question is, does it open above? Does it open above 100?
Yes. I'll give you odds even that I think it opens above.
I'm not taking that. I think so too.
I think it opens well above 100. And the reason is if DoorDash can come out and IPO 102 and open like 185 and, have a $60 billion valuation, I just comparatively speaking, think Airbnb is worth a hell of a lot more than DoorDash. It's just my opinion. You got a food delivery company that's Airbnb that's displacing the hotel industry. I mean, I'm a believer in Airbnb. I don't want to pay a ridiculous valuation. Is it worth 60 or 70 billion? I don't know what it's worth, but if I'm comparing it to DoorDash, I think they're going to pay more than DoorDash. So to get up to over a $60 billion valuation, you got to open in that $100 area. I think it does it. So I think it's opening over 100.
Wow. We talked about the CEO being on CNBC, and we both kind of liked what he had to say. I mean, it doesn't
mean,
he
seemed like a really good guy just from that interview.
I like the business. They talked about the business model. They talked about, I mean, there's definitely going to be a transition from business travel, right? I mean, business travel is coming back, but I think more of your travel is going to be people like us. Hey, we need a vacation. We want a house. We want to, have a big area to go in. And then the other thing I liked that he said was that they put an endowment to improve the properties that people are staying in. And he talked about putting $100 million of his own stock into that endowment. And then the final thing that he said that I liked was that they asked him why he did an IPO versus a SPAC. And he said, because he wanted people to know what they were investing in. And
I like that too.
Yeah. I mean, I have to watch it for a while and see how it trades, but it makes sense. I mean, the way travel is going, I think these hotels they're going to be tough. They will bounce back too, though, right? I mean, is some of these at all-time highs?
They've all bounced back. Remember, I wanted to put the Hilton. How'd that pair do? Remember? Oh yeah, it did pretty good. Remember that show about a week and a half ago or 2 weeks ago? And I said I would short Hilton and go long NCLH. I think NCLH was 22 and Hilton was 110 that day. Hilton has gone up nothing, and NCLH, which I am still long, has gone up $5 on the 22. That one worked really well. So I was saying the catch-up trade relative. And this is how I trade. People were asking me, how do you protect yourself in the markets? In my trading portfolio, I'm market neutral. What does that mean? I have equal longs and equal shorts. I'm making bets of stocks relative to each other. So a Hilton short versus an NCLH kind of made sense that day. My long-term portfolio, I'm long. Do I lose money yesterday on my long-term portfolio? Yes. Because I only do longs in my long-term portfolio. That's my retirement account investing. I believe stocks will continue to go higher over time. I invest in the long side of companies, believing in America getting greater eventually. In my trading account, I trade market neutral. Sometimes I have some long swings, but for overall, I have short swings too. But overall, I try to stay market neutral. So what is that? When you get a sell-off, a significant sell-off, well, I've got some tech stocks, coming down. I've got some tech stocks going up. I try to keep it equal. And all I'm trying to do is extract the alpha from my opinions while trying to take out the market risk. It's a different style of trading. It obviously requires more capital to do that, but I don't have these days where I just get crushed because the market went down. Again, my long-term portfolio, completely different story. My long-term portfolio probably would have been down 1 or 2% yesterday. I didn't look at it. I'm sure it was because I got a lot of tech stocks. But on my trading account, I had a good day yesterday. So, I mean, it's more of my calls versus, if I'm just buying stocks and not shorting stocks, everyone loses yesterday if you're just buying stocks unless you were in like Johnson & Johnson and stuff. So, I mean, you can move around, you can move the capital, you can protect your capital, but I like to make stock money when the stocks go down too. So that's
most of your swings are long though. I mean, when you
most of my swings are long.
Yeah.
But my day trading account is almost always market neutral. Almost always. So my day trades, I'm like, if I am like bullish on some stocks, I hedge it out with Qs and SPYs. So, and then I try to do beta hedging too. If the stock moves twice as much as the market, I'll short, more Qs to make up for it. So I'll even do that. So, I mean, that's how I trade. That's how what it does is it flattens, it softens the whole earnings curve for you there, because you're hedging yourself all the time. So as you're eliminating market risk, it makes you more consistent. Maybe when you're just doing long only, you're going to have huge days when the market's up, but you're going to have bad days when the market's down. When you're hedging yourself, like I do, it smooths your earnings curve, where you're not going to have these huge days because you're benefiting from an up tape. You're just again making money on your calls. Like I go long the stocks. I'll go long something a few days before an event or something like that, and then hedge it out with Qs. So I'm going to do Tesla next week. I'll probably buy Tesla, but I'll hedge it out with Qs. So I have to do it twice as much because Tesla really moves relative to the market. But I mean, even yesterday, Nasdaq's down, 3%. Tesla's down 6% yesterday. Nasdaq's down 2%. If you hedged yourself out 2 to 1, you didn't even lose that much on Tesla yesterday. So
Dennis, I know the
hedging is
answer.
key.
I know the answer to this question, but I don't know if this person's new. Do you sell calls on your long-term portfolio?
No, I used to do this. The reason I don't do this anymore is I learned the hard way in 2009, where I bought all of these stocks on the cheap. And the one thing, if your market's going flat, covered call rating is awesome. If the market's going slightly up, it's pretty good. When the market tanks, you get crushed. So what you're doing is you're giving up your upside, and you are not participating. You're fully participating in the downside. So, I mean, in events like March, covered call rating gets destroyed. So 90% of the time that actually enhances your portfolio and it works well. The times like 2008, the times like 2000 or like March of 2020, the flash crash, you get absolutely crushed in that strategy. I don't like that, so it's not for me. You've got to, if you're doing it, you got to find better ways to protect yourself. But I like people just flat out rate naked puts. The reason I don't do that again is because you're limiting. You say, oh, well, why wouldn't you just do that? Well, you're limiting your upside because you're only getting the premium in, and you're fully participating in the downside if the story turns out to not be as good as you thought it was. So if I'm bullish a stock, I buy the stock. If I'm bearish the stock, I short the stock. I don't typically use options anymore to make my bets.
Okay, I think that was a new listener, so I just wanted to get that. Just bringing up the December S&Ps, folks. We are at the low from yesterday. Yesterday's low was 59.75, and we just ticked to 58.75. So bounce back here to 36.60. We are testing the low from yesterday's session.
Can we talk Facebook here?
Yeah.
No, I haven't talked Facebook yet today, and I wanted to, because this did react to the news yesterday. 2 lawsuits. We knew this was coming, but they actually were filed yesterday. One by the FTC, one by 46 states attorneys general, basically claiming antitrust violations and saying, we want you to divest WhatsApp and or Instagram. And Facebook saying, but you already approved it.
I don't know. And it sells off yesterday. There's been so much of this, and there's going to be more going forward. Antitrust. I mean, I think if they get down to 260 area, I like Facebook. 250 to 260. It's been in consolidation station here for a while. It's trying to digest. It's had a big run. I mean, from March, April, and got down to 140, 150. It's had an incredible run. It's basically doubled since the lows. So it's stalling out here for a bit. And eventually, I think it does start to catch a bit here again. That's why I think if you're buying on the dips down 260s, I think you'd be okay. But again, nothing's guaranteed in these markets.
I think I heard Josh Brown say this on one of the shows when I had it on during the day. I think when I was on my Peloton, he said, it's not a reason to buy the stock. It's not a reason to sell the stock. When I see this kind of news,
I think so too. That's a good.
That's kind of like a wimpy thing to say, but I agree with Spencer.
No, I agree with him. I totally agree with that statement. Yeah. Props to Josh for that. I agree with that statement.
Yeah. We talked about that on the pre-market show, and Spencer and I had the deal went through, okay, you're changing. They're super successful. Okay. Well, you let them do it. Changed the mind. So it got hit yesterday. It has been
got hit because the market got hit, though. Like a lot of this, they can say and blame, but let's be honest. The Qs were down. How much was Facebook down relative? Looks about the same, 2-3%. Didn't get crushed like 10% on this. So saying that was all because of the antitrust stuff, they've been talking antitrust on Facebook for years. You know, just because something else gets filed a suit. Google, the same thing. Amazon, the same thing. All these big companies, there's, you know, people out there who want to make a name for themselves, want to try to break up the big companies there. You know, Apple, Google, Facebook, Amazon get talked about this all the time.
Yeah.
I mean, and Josh Brown made another good point on CNBC yesterday. I mean, look at the competitors. You know, look at Snapchat, look at Twitter, look at Pinterest, look at, you know, TikTok. I mean, can you really argue here that Facebook's just monopolistic here? There's a lot of competitors doing really well. It's a great point by Josh Brown yesterday. Said on CNBC. Completely agree with that.
Well, that's also Facebook's argument as to why they're not a monopoly. The bottom line,
right.
Yeah, the bottom line is if you're going to own like Facebook or Google, like you need to expect these types of headlines every like 6 months for the next like 5.
They do. They're going to continue to come out.
Yeah. So, okay. 8:51. Can we do a couple earnings fast? Can we just do Adobe and Restoration Hardware? Adobe was out. Adobe came out this morning. It was an EPS beat, a sales beat for the prior quarter. They gave guidance that was also very strong. EPS guidance beat, sales guidance beat across the board. So it was a great report from Adobe.
Yeah, report on the wrong day. I mean, you got this, you know, selling wave coming in and the big waves catching it and knocking it down. It was a good report. If we weren't in a selling wave, the stock would probably be higher on this report. I like Adobe down at 460. I don't know if it gets
I thought you were going to say 470.
I'd be a buyer of the dip on Adobe, but maybe not
470 is too early.
I don't know.
Okay.
Is it ever too early to buy the dip? I mean, the stocks eventually go higher, right?
Okay. I
don't know.
I don't even think it gets to 470 today, just the way it looks. But
it's holding
who knows?
up well.
Yeah.
I mean, really, I guess it was a good report. Let's see what it does. I mean, after 9:30, sometimes things change. And when you have an earnings event, a lot of institutions aren't trading the pre-market. So let's see what the big money does when they come in. Are they going to push it higher? Or are they going to come in and buy it? If it opens at the low tick and then starts to catch a bid, that would be my stop out point then. But it's hard to trade these earnings stocks. They're wild.
Looking at the range from yesterday, just if you're looking, I don't even think you've taken out yesterday's. Have you taken out yesterday's low yet? Huh. No, yesterday's. Oh, you there you go. You haven't even taken out. Yeah, 479 and a quarter.
Sure.
Or 26. And, you know, so that, I mean, first things first, if you want to get bearish in stock, let's take out the previous day's low. And because you've had the little dip, if you get back unchanged, that's only $2 away, 483.74. I don't think that's an outrageous target to see it try and go green on the session. I don't know about the 2-day close at 495, but that's it. Was there any other? You said what was the other earnings stock?
Let's do RH quickly. They beat on the EPS, beat on sales, and then in the release they said we believe it's safe to assume that some level of elevated spending on the home will remain through 2021 and possibly beyond.
This had a bad reversal day yesterday, again, with the overall market. A lot of people caught in this one, so completely different story than Adobe. This is a stock that had been running up. It had the upside capitulation high yesterday at 494. I think that any rally is to be sold in this. I think it's going to have an ugly day here for a couple of days. I think it's had a pretty good run from 350 to 450. Gosh. It needs some work. This has got some work to do in the lower 400s, I think. So I actually would be a seller of this. So I have a strong convicted opinion on this. Just an opinion. I would sell this stock.
I think I've been wrong on this stock since 65.
Oh yeah, so yeah, we should put that. We aren't very good at calling our age because I never thought it was a 400.
Full disclosure.
We never understood the $10,000 antique couches that they had for sale. But
this was one.
Logic again. We went wrong with logic.
This is full disclosure. I don't know what the hell I'm talking about in this stock. This is the worst stock. And I'm glad I didn't even put it on my screen. I wouldn't even look at
forbidden.
Like when I go to the mall and I go by the store, I start shaking. Oh, I don't go to the mall anymore.
I don't understand. How is this small space stock the one? I go in that store and I'm just scared that my wife might actually buy something because there's like a book sitting there and it's like a fancy looking book. And I was like, oh, it's probably $10. Oh no, it's $250. I mean, everything. I guess they sell one thing and they pay rent for a month. So I guess
if you bought something at our age or your subscription, put a 1 in the chat.
You only need a few people when they're selling stuff for that. What's that antique? It looks like they bought it at an auction sale for $500. They're selling it for $10,000. Their markups must be huge. They must have margins like at 90% margins, man.
It's the opposite of Dennis, who buys stuff cheap at garage sales.
Oh, I know. This is like my anti-store. paying up for everything at the garage sales. Makes zero sense to me. But anyways,
Do we have some selling balances or something? We just kind of sliced and diced through yesterday's low at 59.75.
let's get a look. Imbalance land. No, you know what? Imbalances, there's not much there. Pfizer, your typical buy and balance, 373,000 shares of bloody stocks up every morning. It's up again, even on a down day. I guess everybody's anticipating that vaccine is going to get approved in the U.S. here today.
Right. Well, how could it not after all this?
You got CVX. You got some of the oil stocks trading higher. That's one. The USO is trading up. So a little bit of life in the oil stocks. I'm just looking, it's just overall sectors here. And then you got the tech wreck going on here again. Tesla obviously getting hammered down $32. We said we like it at 550. We'll see if it gets there.
Christy Morris says, my fancy grandma loves RH, LOL. I hope her grandma's not listening to the show.
My wife likes the stuff in there too. I just won't let her buy anything in there because it's too expensive. I was like, we got to take a mortgage on the house here to buy stuff in there.
Rates are low.
Rates are low right now. Rates are good right now.
Let's talk Rocket.
Maybe we should go buy some stuff at RH. Now's the time.
Let's talk Rocket for a second. Good
day. The hedge. This is the market hedge. It moves up when the market's going down and it moves down when the market's going up. Why is that? Why is this stock just not participated at all, though? That's the first question.
I don't know.
The second question is, obviously, are you long Rocket? I'm long from 24. It's been a dog.
No, I played it. I played some calls on both sides of it, or calls and puts on it. But I mean, it's just kind of sitting here. I mean, 20 is great support, right? And 20, look at 20 to 20, tradetherange.com. This is the only thing is you would have had to wait like 5 days if you bought it at 20 to get a pop, but I don't know. And the other thing too, I just keep thinking, if this is the hottest the housing market, I mean, it could get hotter, but man, this is the environment. I mean, if rates ever tick up, which is never going to happen because of the deficit, but
it's very concerning that it hasn't participated at all in the recent rally. So it gets in life. I don't know what the headline, if there was a headline driving it up yesterday. You got all kinds of resistance from 23. The trend is not your friend. I'm long this stock. I'm actually looking at some rally to sell. I said I was going to be in this long term. I got in the long term account, but it's just been such a dog. It's hard to look at it. I mean, I was looking at my long term portfolio and I'm up in everything. And this is one of the stocks I'm down in. And I'm just trying to figure it out. I don't know why it hasn't participated. It feels like it should have a story, but it doesn't. I guess it came out and had the big run back in August and caught everybody, and everybody's been caught ever since.
Okay, continuing to leak here in the S&Ps, down 18 and a half handles. I'm looking at my dailies here. 44 and a quarter is your 6-day low. Just remember, guys, got the rollover going today. So the volume is going to be split between the December and the March contract. So little bit of a sell-off here. We'll see where we end up here at the pre-market low. But 36.44 and a quarter, that's your 6-day low.
And Dennis, I know you love your SPACs, so I want to put a new one on your radar, SSPK. This is, as far as I can tell, the first weed SPAC we've got.
Emerging with
I wish I would have had this one off the 10.
Why didn't you tell me about this yesterday? A weed
off
SPAC?
The 10. There's another one off the 10. Is there any other weed stocks out there that are going to be looking for acquisitions? What'd they buy? Did they buy something?
Yeah, they bought a company called Weed Maps, which I've used before. It's basically like the Yelp for cannabis. Is how I would describe it.
That was.
Joel thought he was investing.
I was in that stock. I was in the Google of cannabis.
The Google of cannabis.
Yes, I'll buy.
Actually, the Google of cannabis is Alan Brockstein.
You told me to get out of this one, and I did.
Which one was that?
Leaf Buyer Tech Incorporated.
Where did that get to? LBUI. Then I got up to $2 or something.
Yeah, I sold it
14 cents.
Yeah.
So I told you right on this one.
You did.
I was like, get out of that while the getting's good. 14 cents.
I don't even know
job
why
getting
I bought
out of
it.
that, Joel. You were crazy, man.
I never buy stocks like that.
I know. You were talked right into the story on this one. They had you suckered in. Lucky I suckered you out.
Yeah,
and send me a Christmas card for that one.
The other one, Yeah, and I'll send you an L Brands gift certificate.
I want a restoration hardware
Hardware.
gift certificate.
Like
Yeah, they send you $100 gift of restoration hardware, but nothing's under $500 in the store.
And this is
so they're
this.
definitely making it's a hidden 20% discount coupon is what that is, because you can't get anything for $100 in that store.
You know what? I yacked this LQSF out. LQ, another one you told me not to buy. I bought it high.
If they got
and
more than 4 symbols, I don't buy them.
yeah,
They're
this
not
is.
good enough
I
to be
thought
listed
this
on
is like the
exchange.
distributor of weed in Canada. I thought it would do a lot better, and I ended up having to sell this one not because I wanted to sell it. It's just I had to move some money around between some different places, and like the new place was like, we don't take this stock. I'm like, okay, well then I got to get out of it. So I don't know where that. But anyways, what was the other stock? Something that I wanted to cover before we was it? Oh, people PLTR people have been asking about.
Oh, big sell-off yesterday. So I'm still long it. Obviously didn't get out above the 30. Maybe
Oh,
I
I'm
should have.
surprised you. Was that a swing or a long term?
I don't know. I just was buying the dip.
I'm surprised you did.
I didn't. You know what the problem is? I bought a half position, so then I didn't care.
You got to sell the rip too, man.
I know. It ripped like, I was like, I don't know. I bought like 22 and a half, went up to 30 and a half. That was like a 30% move in 4 days. You got to take those profits.
Oh my gosh.
So I missed the out. I'm not. I don't think I'm selling it here at 25.75. So
L Brands 41 and a half.
One concerning is I didn't make a new high though. So as a story, I'm kind of spooked on a lot of these smaller tech names right now, where I think you can have a run here towards the end of the year and some of the mega casts, but on these smaller tech names, I'm a little bit spooked right now.
Still long and strong on the L Brands.
Joel will have L Brands on his tombstone.
I don't know. I want to get out of it too.
Look at the stock, man. It's unbelievable. I don't know what Lisa saw in L Brands, but man, she sees something. And wow,
women still wear underwear and buy bras, and that's it. I don't know. We'll see what happens. But I think it was back. I don't even know if it's on the chart where it gapped up one day. But anyways, we like to tease each other, folks. And like Dennis, sorry about that comment that you can't talk 2 seconds about anything. I saw you make a little wince there. I saw you wince.
That's a good point.
I hurt your feelings. I'm sorry.
I know. I had a little tear in my eye here. But...
And your mom yells at you and tells you that you don't let me talk on the show.
I know she watches the show and she's like, "You never let anybody else talk. Stop talking."
It's all right. Some
days told me that my whole life.
Like we haven't heard from Spencer. Spencer, are you working today or what's going on?
I'm here. I was going to say some days it makes my job and Joel's job pretty easy, but I actually do want to pivot. I want to bring on our second guest here.
I'm sorry.
He's got some options ideas for us, I hope. His name is Dmitry Pargamanik. He's from marketchameleon.com. Comes on every few months to give us some options trades that he is watching. Let's see if I can get his video and audio going here. Dmitry, good morning. Can you hear me?
Yes, Spencer. Can you hear me?
Okay, I hear you and I see you. Let's talk some options. What we've just talked a lot of stocks here. What's on your radar here?
So I think usually we're going to do something different today. Usually we look at earnings, and I think today I wanted to show you an example of a seasonality play. All right. And before I do that, can I share my screen and just
share your screen and walk? I like having you on because you walk us through trades. So walk us through a trade here.
So before we look at the trades, so these are going to be the trade ideas over here. But before we do that, let me just kind of simplify what we're about, the logic behind it. And obviously, nobody knows for sure on any given stock what's going to happen in a week, 2 weeks, it could go up, it could go down. We don't know for sure, definitely. So what we try to do is create kind of a model for ourselves, what we think is most likely to happen in the absence of not knowing, okay? Kind of like, think of it as a handicap. So I'll give you an example. Let's say we have a football team, team A, playing team B. Well, if you have no information, it's 50-50, right? You pick which team is going to win. But what if I gave you a little bit more information? Let's give an example here. Let's say that team A and team B played 4 games, in the last year. Team A beat team B 3 times. So 3 out of 4 games, team A won, team B won 1 game. So now you have a little bit more information. And if with that, now you could say, well, given this, I think team A is more likely to win than team B without it, with, not knowing anything else. And of course, we could add more layers of information to start handicapping. So like, here's one more example before we jump to the trade card. But let's say that when team A played team B, on average, they beat them by 10 points, right? So now we even have a handicap we could give that we think on average they beat them by 10 points, which is different if on average they beat them by 1 point in overtime, right? By 10 points, it's a little bit of a stronger signal that they're a little bit of a better team. So we still don't know who's going to win, but now if somebody gave us even odds, team A looks like the better choice. So if that makes sense, I'm going to start kind of going to the example.
Yeah, so bring that into a trade here.
Okay. So let me exit this. And over here, when we go to the homepage, we have different types of trade ideas. Here we're looking at a seasonality idea. So that's this tab over here. And I'm going to jump over here to the SPY. And that's just because it's the most diversified equity out of all of them. And before we take a look at this actual option trade idea, let me show you the first layer, of the handicap. So I go to this tool over here, and I have SPY already queued up, and I'm going to look at a seasonality play. All right. So right now I'm going to take a look at a seasonality play, which I'm going to pick a calendar period around a year and see how did SPY tend to perform around a certain calendar period. And this one, it happened to be the starting date. We'll set it at yesterday's close, right? December 9th. And on this trade idea over here, this is already filtered for us January 8th expiration. So I'm coming back here and saying, okay, between December 9th and January 8th, okay, in the last 12 years, how did SPY perform? So over here, we see the statistics here. This is the visual. You could see that a lot of greens here, that means it was up during that calendar period. The reds were down. So we see 83% of the time it was up, 17% it was down. So it's like a 5-to-1 ratio. So not having any other information so far, this looks more like a bullish case for SPY than a bearish case. We could also see that on average during that period, it gained 1.49%. The median return is 2.25%. Also, we could compare the average gains versus the average losses. So on average, if we took all the positive moves, on average, it was up 2.59%. All the negative moves down almost 4%. So you could see that when it is down, the magnitude of the down moves is a little bit greater. That's why we want to kind of look for a predefined limited risk type of strategy. Okay, and that's what we're going to get into. And we see that the largest move in this period to the upside is 4.7%, largest down move 6%. And this graph over here, this just shows us how from day one to the last day, how on average it progressed. So you can see, even if we start here, its lowest point historically is around like December 14th, December 15th. So you can choose to wait or just do it right now.
So higher more often than lower. So you're
exactly.
You're just gonna buy some calls and call it a day?
Well, not exactly. So let's go back to that trade idea and see, how we could set it up. So we want to make a scan where our risk reward, we're trying to find the best risk reward and limiting our risk. So let's take a look at this trade idea over here. So this is an SPY, all right? And here it's just repeating that in the last 12 years, during this period, 83% of the time it was up for an average gain of 1.5% in the last 12 years. I click on it. Here's the trade ID here, and it's looking at a bull put spread. So in a bull put spread, it's a credit put spread. This is what happens. You're selling this 366 put. This is what's suggesting buying the 362.5 put. So this is a $3.50 put spread for $1.19 credit. All right. So in the scenario that the stock just collapses, market's way down, it's wrong, you have to buy back for $3.50. So your loss is $2.31, right? Because you received $1.19, you buy back for $3.50. If it stays above 366, right? Which is it's already right here. It's above 366. As long as it stays above 366, you keep that credit of $1.19. If it goes below 366, you still have $19 cushion, for it to drop. But as long as it's above 366, in other words, it doesn't even have to go up. As long as it's like right here, you keep that $1.19, which is basically a 51% return on the amount you have at risk, right? You're risking $2.31 to make $1.19, 51%, 51% return. We think theoretically it's worth $1.04. So this is kind of our second layer of an edge, what we call it. And what this means is that historically, if we looked at, and this is using 6 years of data, if we looked at SPY and how it moved in a 20-day period, because in a 20-day trading period. So from now till expiration, there's 20-day trading days. If we looked historically, those price returns over 20-day period and applied this similar strategy with the strikes the same distance away from the stock price, on average, the end result was this would be worth $1.04. So sometimes higher, sometimes lower, sometimes zero, sometimes, the full amount. On average, it would have been worth $1.04. So if we're selling it.
So Dmitry, is this a trade that you're going to put on?
Well, I'm just showing you one trade. Like, so one thing is, look, I'm not a broker dealer, I'm not an investment advisor. I can't even recommend, I can't recommend. This isn't a recommendation. I'm just sharing ideas.
Right.
And this isn't like follow my trade. This is basically helping you use tools, to generate ideas, look at risk reward. So I can't tell you if I'm putting on or have positions. Okay. So keep that in mind. Not an investment advisor. So this is just helping you.
Can you give us one that's on like maybe a specific stock and maybe not SPY? Maybe, I don't know.
Sure.
I saw Facebook up there before that. We just talked about that one a few minutes ago.
Sure. So again, this is Facebook. This is also looking from a historical seasonality. And I saw you guys talking about Facebook's, and they're coming into that antitrust lawsuits. You have to take that into consideration, right? Because the historical data is just showing you how it moved on average. If there's anything else going on, you have to take that into consideration and either handicap it more or you skip it. So you have this list to do your further research. But here in Facebook, we see the same here from December 9th to January 8th in the last 8 years, Facebook stock increased 87.5% of the time for an average gain of 4.8%. So now this scans for trade opportunities, again, using all the conditions that we preset. And if you want to add your own conditions, you could just go right to the screener, and do it yourself over here. But this is what it filtered out. Selling the 270 put in Jan 8th expiration 2021, buying back the 265 put for 95-cent credit. We think theoretically it's worth 71 cents. So that's giving you a 6% theoretical edge with a historical probability of success 80%. So that's one in Facebook. We could go down here. Let's take a look at AMD. So here are two of them in AMD, a bulk put spread, credit put spread, bulk call spread. So this is Advanced Micro Devices. Historically, during this period, from close of December 9th to January 8th, the stock was up 83.3% of the time for an average gain of 10.1%. Here it's suggesting selling the 90 strike put on January 8th expiration, buying the 86 put for $1.60 credit. We think it's worth $1.08. So that's a 21.9% theoretical edge with a historical probability of success 71%. All right, a bull call spread. So this is a little bit different. You're buying it, so you're paying for that spread. So here you're buying the December 24th 83 call, selling the December 24th 87.5 call for $3.15. So you're purchasing it. We think it's worth $3.81. So if you're purchasing it below, that's a theoretical edge of 20.8%. And that's with the historical probability of success, 82%.
And so the reason I like this is because options at their core are really just about probabilities, and that's what is showing is you have to get the direction right, you have to get the timing right, and this conveys it in a clear way. Dmitry, before we wrap up here, just do you have any overall thoughts or like how are you approaching like the market right now as we sort of head into the end of the year here? We're at all-time highs, we're just off all-time highs.
Right. And basically, for me, I'm always a little bit long because the market just tends to go up over a long period of times. So sometimes, I would be more aggressive or less aggressive, but for me, I'm always a little bit long. But when the market actually sells off, when there's actual money panic or increase in volatility, to me, that presents more opportunities. So I'm okay with being a little bit long and losing on the way down because, I already know how to kind of scan for and search for opportunities. But overall, just a little bit long. And we are coming, we have that stimulus package still coming up. We have a lot of liquidity getting pumped into the market. We have the coronavirus. So at least for the time being, right, it looks like at least a little bit bullish. From the market perspective, not specific stock, but at least from the market perspective.
All right, Dmitry Pargamanik is the co-founder of MarketChameleon.com. That's the platform he just showed. Walked us through some trades. We appreciate that, Dmitry. If we don't talk before then, have a good rest of the year. Have a good holidays, and we'll hopefully get some ideas from you in the new year.
Great, thank you, Spencer. Have a great day. Thank you for having me on the show.
All right, that'll be a wrap. I just want to read you our disclaimer. Please remember all the information from our show is meant to be used as informational purposes, not for investing or trading advice, and the opinions of our hosts and guests do not represent that of Benzinga. Hit that like button if you thought this is a good show. We appreciate that. Thanks to our other guests, Marc, Chaikin, and Dmitry. Thanks to all of you in our chats. That's it. Joel and I will be back with you at 3:40 p.m. Eastern time to wrap up today's trading session. Until then, everyone have a good rest of your day and good luck in your trading.